global supply of fibers and yarns was clearly pushed by man-made fibers. Major drivers were the both mainstream types, polyester and nylon, expanding almost 10% each, as well as small-scale segments such as aramid, carbon, and spandex fibers. Cellulosic fibers marked a new all-time high. They experienced gains across the board, with the fastest growing fibers, including modal and lyocell, at distinct double-digit rates each. The natural fibers business suffered from the fastest decline in 5 years due to pandemic-induced inventory accumulation, essentially in cotton and flax. Supply at global stage recovered last year to around 119 million tons, equal to an average 15 kg per head quantity. However, world upstream industry has lost a joint volume of nearly 9 million tons in the previous 2 years, when calculating with the century's average annual growth rate until pandemic outbreak. The performance in 2021 was mostly characterized by positive growth, but it certainly was not a broadly based recovery. In fact, a number of adverse economic conditions and logistical issues, such as port congestions and sharply heightened shipping costs, prevented a return to the long-term growth path, and it also appears ambitious, or rather highly disputable, for 2022 and the year after. An overwhelming share of 60% fiber material originates from mainland China, that witnessed modest growth in natural fibers, primarily cotton, and strong gains in polyester, nylon, and spandex to reach a new all-time high. India, in second position and world's largest supplier of natural fibers, continued its transition from cotton to man-made fibers. The Indian textile industry, worth about $150 billion at present, is projected to expand above $350 billion within the next 5 years. To reach this target, man-made fiber demand is likely to see a big boost as cotton production has reached a plateau at around 6 million tons annually and is not expected to increase significantly. Thus, the industry needs an incremental man-made fiber production of 10 million tons, with both nylon and wood-based cellulosics hitting new peaks last year already, and cotton cultivation slightly declining. United States, Turkey, and European Union all experienced double-digit losses in cotton harvesting, but succeeded to lift man-made fiber production. US manufacturing returned to pre-pandemic level. Turkey marked a new peak following further polyester capacity buildup and commissioning of the country's first lyocell line, while European recovery was much slower due to the closure of acrylic and spandex fiber lines. Development of market forces during more than half a century are shown in the chart. It reveals drastic changes at the expense of natural fibers, currently accounting for about a quarter of the world market. The multi-decade trend in favor of man-made fibers is to continue, with a higher share of bio-based and recycled materials in synthetics, while wood-based cellulosics will experience an increased share of best-in-class, eco-friendly lyocell fibers, and textile-to-textile recycling to comply with circularity regulations. Global nonwovens manufacturing had to accept its very first annual decrease after outsized demand in the year before. Fiber-based nonwovens continued their steady growth in quota-free period, up by almost 4% to 10.5 million tons. Polymer-based types experiencing unprecedented dynamics in 2020 by skyrocketing incredible 33% weakened, almost 7% to 8.5 million tons. While joint supply softened 1%, the decisive difference to fibers was that nonwovens industry returned to its long-term growth dynamics we were used to prior to pandemic. Asian manufacturing has confirmed its majority share despite contribution from the industry in mainland China shrinking almost 7% and losses in Korea and Taiwan, stagnation in Japan, gains in Indonesia, Malaysia, and Thailand, while Indian output surged 18% to an all-time high following dynamic spunlace and needle-punched operations. The main processes in PR China experienced a mixed performance, with spunlace for anti-pandemic materials dropping, while polyester spunlace for engineering end users surged. Output of needle-punched nonwovens rose 6%, and spunlaced nonwovens increased by 8%. American production expanded 3% and by 2% in Europe, with growth drivers in both regions resulting from dry and spunlace activities. The outlook considerably darkened from 6.1% global growth last year to 3.2% in 2022, according to IMF World Economic Outlook Update July, which was 1.2% lower than the forecast in January. The war in Ukraine, higher than expected inflation worldwide, primarily in the US and major European economies, geopolitical instabilities, ongoing supply disruptions, and port congestions from China's zero-COVID policy, extreme developments in energy and feedstock markets have hit world economy that still is recovering from pandemic. High inflation rates across most parts of the world are expected to remain throughout the year and in 2023. This will increasingly dampen consumer sentiment. Textile and apparel retail sales in the first 6 months improved over the preceding year. However, they did not reach pre-pandemic level. A further softening seems most likely, which may lead to reduced operating rates and temporarily suspended spinning production, given high inventory holdings along the chain and apparently early inventory inflows of autumn-winter collections at brands and retailers. The forecast for this year's fiber supply suggests natural fibers output climbing about 4%. Natural fiber expansion essentially will arise from cotton in 21-22 season. Latest projections for the 22-23 season, starting in August, include drastic impacts from extreme weather events. Pakistan declared state of emergency end of August after more than a third of the country has been completely submerged by the heaviest monsoon rains in a decade. Cotton production in Texas has been decimated by drought and extreme heat, expecting just half the normal annual yield. Deficit from the both countries may add up to almost 1.5 million tons. Flooding in Australia during harvesting may result in another 8% lower output, equal to 100,000 tons loss. Another shortfall may occur following excessive rains in many parts of Western India in July. Wood-based cellulosics are projected to increase around 3%, and synthetics expected to be flat. An unpredictable Q4, of course, might significantly mess up the prediction for man-made fibers. First half man-made fiber production revealed gains in India, stagnation in China and Japan, losses in Korea and Taiwan. Operating rates in US and Europe were still hampered by labor shortage. Inventory adjustments in US along the textile chain after summer holidays will increasingly squeeze spinning rates, and year-on-year import growth already turned negative from mid-year. The European cost structure following skyrocketing energy costs increasingly will make regional supply less competitive to Asian imports. The development of export values in selected industries during the first 6 months was clearly pushed by a price surge in energy. Energy at such an elevated level was not even suspected in wildest expectations. Higher wages, increases in feedstocks, chemical additives, and logistics further added to concerns. Mexico, the only non-Asian industry among the 10 fastest growing textile and apparel exporters, benefited from higher US demand. However, US retail sales came in flat since April, and consumers seem to shift their spending to services. In addition, inventory adjustments will probably gain weight and may cause lowered flows into the market. Ultimately, it appears recommendable to put fast-moving prices into perspective with volumes to get a better sense of the sentiment in the manufacturing sector. EU data show imports in euro terms jumping 35% from the listed suppliers, while quantity increased 13%, with just 3 industries, Indonesia, Sri Lanka, and Thailand, suffering from reduced volumes at around 4% each. Myanmar, with fastest dynamics in volume, may surprise, and is a result of full year 2021 shipments dropping 14%, as economy was severely impacted by the military coup on February 1 and pandemic, with garment employment falling by a third last year. Top 3 apparel suppliers, Bangladesh, China, and Turkey, expanded deliveries in volume terms of knitwear between 18 to 29%, while woven garment surged 30% from Bangladesh, rose 18% from Turkey, and declined 3% from China.